In today's video, we're going to be going over an extremely useful tool that can be used to help spot counter trend opportunities and reversal trades. This tool is the Fibonacci extension, and today we'll be going over what this tool is, how to draw it out, and later on in the video, we'll take a look at some practical applications of this tool that can be used again to spot those counter trend opportunities as well as reversal trades. Welcome to the trading channel, guys. My name is Steven, your honest trading coach. If you are new here, go ahead and click that subscribe button to be alerted whenever we come out with valuable content like this each and every week. Click that like button for me while the intro and disclaimer roll, and I'll be right back to talk more about this excellent trading tool. Okay guys, so let's go ahead and dive right into what the Fibonacci extension is. And this of course is the ultimate beginner's guide. So what we're going to do throughout this video is we're going to start here with what the Fibonacci extension is, and by the end of the video we're going to come up with some practical applications where we can use this tool to help us spot counter trend opportunities as well as reversal opportunities in the market. So let's go ahead and draw on some price action here on the chart. What we're going to do is take from swing low to swing high, back down, back up, back down, simulating a trending market. Now with the Fibonacci extension tool, the purpose of this tool is to give us a multiple of a specific impulsive leg in price action. These would be the impulsive moves that break above previous levels of structure right here. So the Fibonacci extension is meant to be pulled from swing low to swing high, and exactly as the title says, it's meant to give us an extension of this move. Now, how much is that extension is determined by the levels that we use on our Fibonacci extension. So let's go ahead and bring on a Fibonacci extension. We're going to pull this extension from swing low up to swing high, back down to swing low. And that is the correct way to draw the Fibonacci extension. What you want to do is go from the swing low up to the swing high and then pull all the way back down into the swing low with your extension tool. Once you have that pulled, as we just discussed, this is an extension of the previous impulsive move. So what this means is that once we have the extension pulled, these numbers to the right, at least on my Fibonacci extension tool, the numbers to the right are what is known as the multiplier. So if this was a math equation, this 1.27, and let's say that our impulsive move is X. If this was a math equation, it would be X times 1.272, and that would give us this line right here, the 1.272 line. Same thing for 1.414 and 1.618, and these are the major Fibonacci extension levels that I've used personally in my trading. Let's go ahead and double click it and I'll show you guys how to get those on the screen. So as you can see here, we have our 1.618, we have our 1.272 and 1.414. All you have to do is uncheck the rest of the boxes in order to get those extensions on there. I also like to do a 2 times multiplier on my Fibonacci extension as well, just to give me double the previous impulsive move. So again, I'm just going to go over that one more time because I know it may have gotten a little bit confusing. What this Fibonacci extension tool is just an extension of this previous impulsive move. We have multipliers here at 1.272, 1.414 and 1.618, also our custom multiplier of 2 up here. And all this 2 is if we're using X in the equation for our impulsive move is X times 2. So if you were to draw a straight line, and we'll actually go ahead and do this, let me get another straight line tool. If you were to draw a straight line here from your swing low up to your swing high and then clone that move to the same exact distance, you would get that multiplier of 2. And we'll go over how to draw this once more as well. Continuing up, as you can see here, we have a break above resistance with this move right here. And what you would be doing with this Fibonacci extension tool is you're waiting for a trending market, because the purpose of this tool, at least the purpose that I've used this tool in my trading, is to give me an indication of where the market may turn around, these high points, where the market may give me counter trend opportunities, or best case scenario, where the market may even give me reversal opportunities and start to trend in a different direction than the current direction of the market. So initially waiting for a trending market like so. Once we see this market start to break above previous resistance, if we're in an uptrend, then once we get that break, we can take that Fibonacci extension tool, pull from our swing low up to swing high, back down in. And these three levels that we have, the multipliers we have in our Fibonacci extension, tend to be levels that the market uses as resistance during trending markets. Now, when these levels line up with previous resistance, that can make them even more powerful. Another important aspect of this, guys, is that you don't want to just be blindly placing trades at the 1.27 or any of these other ratios. It's important to add different conditions like we just discussed, maybe a previous level of structure resistance, along with any specific entry reasons you already use in order to optimize this tool in your trading. So now that we've taken a look at what the Fibonacci extension is, a little bit about how to draw it, and the ratios we really need to be paying attention to, let's take this down to a real market and look a little more at the practical application of this tool. Okay guys, so we're gonna go ahead and take a look at some practical applications for this and using this tool in order to help capture counter trend and reversal trades here on real markets. So here we are on the Aussie dollar daily chart. What we're going to be taking a look at here on this chart is this nice impulsive move down right here. This move broke into a downtrend by breaking below all of these levels of structure. Once we have that break below all these levels of structure, we're waiting on a pullback. When we get that pullback, that's when we can start to draw on our Fibonacci extension tool. The way we would draw that is from swing high down to swing low in this case, and back up into the swing high. And once we have that tool drawn on, we can spot out our possible levels of support for counter trend trades and for possible reversal trades like we see here on the chart. So again, waiting for this impulsive move down, breaking structure levels, waiting on that pullback, then drawing our Fibonacci extension from the swing high down to the swing low, because what we're looking for is a counter trend opportunity zone right here at this 127 or possibly at the 1414 or even all the way down at 1.618. So in order to find those levels, we have to draw that extension on. Once we have that extension on, waiting for the market to get down to those levels, and then creating rules in your trading plan for how you actually enter the market based on this is how you would put this tool into your trading arsenal. And if you'll notice something about this particular trade, if I take a horizontal line and draw it right here, you can see that we have a major level of structure support looking left. So we have that major level of support lining up with the 127 extension of our most previous impulsive move down, which gives us a great opportunity to capture that reversal trade. So that's one practical way to use the Fibonacci extension with a reversal trade. We'll take a look at one more example of how to use it as just a counter trend trade. So let's take a look at a counter trend opportunity using this Fibonacci extension tool. Now we're going to take a look at another opportunity based on this Fibonacci extension tool. If you guys noticed in our last opportunity, the market continued pushing up in that reversal scenario, but more often than not, you're get a situation more like this based around these levels. This is going to be a counter trend opportunity where the market did not completely reverse. And what we're going to do is we're going to use this trending impulsive move down right here that broke below previous structure as our impulsive move to draw our extension on. So let's go ahead and do that. Draw the extension from swing high to swing low, bring it back up to that swing high. And as you can see, this market comes down into the 618 retracement, creates a nice double bottom scenario before creating a counter trend push up and then continuing in that downward trend. So for these types of trades, more often than not, what you'll see is the market get to these levels, create some kind of trading opportunity, and then continue in trend after making it up to previous structure support or resistance. In this case, the market got right back up to that previous structure support level and found resistance at that level before continuing in the downward direction of the underlying trend. So that was just another example of how using the Fibonacci extension tool can be a benefit to your trading. Let's go over this specific trade one more time, guys. What we're looking at is a downward trending market. And you can do this for an up or down trend. Important part is you're waiting on a trending market. Get that trending move, pull our extension on that trending move by going from swing high to swing low, back up to the swing high. Once we've done that, we will have our levels pointed out with the lines of this tool, and what we're doing is looking for counter trend trading opportunities around these levels based on our trading plan. And your trading plan should consist of not only Fibonacci extension but also other conditions and other entry reasons that you use along with this tool in order to amplify its effectiveness in your trading. And this, traders, has been the ultimate beginner's guide to using the Fibonacci extension. I hope it was extremely beneficial to your trading. If it was, then you know what to do. Go ahead and click that like button. Make sure to subscribe if you are new as well. And guys, if you're at a point in your trading where you're getting tired of just going through the randomness of free YouTube videos, because the truth is that rarely does a trader actually become profitable through random YouTube videos. More often than not, it takes something similar to the way you learn any other skill, which is through an organized system that teaches you step by step how to actually create success in trading. So if you enjoy our teaching style here at the Trading Channel and you would like to learn more about some of the more advanced training that we offer beyond the scope of the free things we offer here on YouTube, then we have a program called the EAP Training Program that we've ran here at the Trading Channel for over 2 years, and that has helped a number of traders on their path to becoming profitable. Included in this program is numerous resources, such as a full training course of the strategies and entry reasons we use, along with review videos going over those strategies, backtesting tutorials, risk and money management tutorials, and much more. So if you're interested in any of that and you'd like to learn more about that training program, feel free to click the link in the description labeled EAP Training Program. If you would like to see more testimonials from other traders who've already been through that course, then what you can do is just stick around through the outro to see those. I hope you guys enjoyed today's video, and as always, trade green, and I'll talk to you in the next one.
The pain I felt is paid for, all is said and done. Oh, I am restricted, fixed upon the web. I need to kick the habit that my mind is breathing in. Break out, I've got to see. Spent all my life holding all of it closely. I played it innocent, a feel of discontent. I'm finally facing it all, fearless.